started smiling, 'cause this pretty little girl from the island was gonna make me fall somehow. Well, now 3 little birds, they were playing, so I asked her how long she was staying. Said she got a little money I've been saving, and I'm just trying to go with the flow. So, you know, I took a little day job down at the Suncoast Surf Shop. 8 to noon in my flip-flops ain't a bad way to make a little dough, no. Down on Boca Ciega, I met a little heartbreaker. She said she'd come from Jamaica, but she'd be living on the mainland now. And then we talked for a while and
I'm just shutting down some other resource so I don't use all my resources here. All right, are we all good to go, team? I just want to make sure that we got everything up. All right. Yeah, what else do I need to do? We need to share my screen. Okay, today I'm doing a remote class. Okay, I'm up visiting my mom and up in Seattle area. So things are going to move a little bit slower because I'm not on my PC, which has a lot more stuff going on there, or a lot more power. So let's go ahead and get started. Welcome, everybody. Today is our live stream. Today is the September 27, 2024. And we got kind of a lot going on in the marketplace again. Little confusion. I got a nasty old fly here that always, you know, funny thing about flies, you got the whole house to fly around in, and they got to come and bug you, right? All right, let's get started here. A lot of things in the news that are kind of causing some hesitation. Okay, watch stock market investors are freaking out over economic data they used to ignore. Key indicators say S&P will continue, almost like a squeeze at this point. We're looking at the equities right now since China has put out a pretty big stimulus package and causing the markets to really start to rock to the upside. In the U.S. markets, I'm still not seeing a lot of that volume or monies flowing back in. A lot of folks are still struggling out there trying to make things meet. Okay, so keep in mind that we will see money coming off the sidelines, and you got to kind of trust your feeling. When would you really want to be buying? At the top of a market, or would you be waiting for a pullback? Okay. But a stimulus is just putting a ton of capital into the market, and some of that is flowing over into the US markets. Yeah. Okay. So we are in the last 2 days of window dressing. End of the quarter will be in October 1st, will be on Tuesday next week. So start to anticipate about 7 to 10 days from the end of the quarter that we're going to have a lot of stocks start to come out before their earnings and kind of give the wink, wink. Yeah, things are not so great. Okay. We're looking at Broadcom. We're looking at a lot of the AI. There is some, it looks like with the half-point rate cut, they're saying now, oh, refinances surge 175% from a year ago, but rates remain at a two-year low. So it seems like the media is pumping things up, and we have to be a little careful with that. If you got that little tickle in your tummy that kind of feels like something's not right, it's probably not right. That doesn't mean just go all in. It might mean downsizing your position and just being a little bit more cautious in your trading, using smaller size and, of course, adjusting your stops. Okay. Natural gas today is the last trade date. So I want to come back out and check on natural gas and crude oil as we get started. Oh my gosh. And I gotta get back in
Order
on that
filled.
one. We just had a ballistic move on natural gas to the upside here in the pre-market. I got to get that back now. The thing about natural gas today is it's the last trade day. Okay. So as prices shooting to the upside, okay, they still will be looking to get out of that front month contract. Okay. So I'm looking down at a tick chart to kind of refine that area. And it looks like we have it right there about 2.849, which is right near where we have a zone marked. Okay. So I'm still anticipating that the front month, which is the October contract, the traders will still try to get out of that. Okay. And I've got a little bit of a hole to dig myself out of now. We do trade live in our classes and when we're doing here. So you're going to see losses and you're going to see gains. Okay. We manage that risk, and when things are just not right, we get out. Okay. Look, trading is real. Nobody makes a profitable trade each and every time. Okay. And we're trying to help you see the right picture on the price chart. So I'm about ready to take another shot at this and play it back to the downside. The open range candle is so big, and we're getting such a squeeze on the market right now. I'm going to put a trailing stop on this, a trailing sell stop. See, I'm in my sell territory there. Okay. And yeah, we just hit that level. So let's go ahead and take that trade.
Order filled.
All right. And you're going to have to give yourself a little wiggle room. It's still pretty volatile. Okay. And I've got a little bit to make up for that. But well, we found the right area. Okay. And we're still anticipating the contract expiration or last trade date. Okay. Now the Globex range compared to the daily ATR has been increasing over the last few days. Okay. So the daily ATR is about almost 14.5 cents now. Okay. Where prior it was much lower, it's like about 12 cents. Okay. But as we're getting more attention on natural gas, prices are starting to fluctuate. Okay. Now, the big culprit about natural gas today is that it's the last trade date. And there are very specific pieces of information that we watch for on the last trade date. Okay. Because the markets, well, last trade date's not till like Sunday night. Okay. I want to make that clear. So if you go out to the CME group and you check on the last trade date, it's going to say, well, that's not today. When it falls on a weekend, sometimes they'll go the Friday before, or they'll go after. So when you check your website, you check with your broker how they're going to do the last trade date, or your software, how that works. Just be be attentive of that. Okay. All right. So we're going to let the natural gas trade play out here. We should see a nice significant move back to the downside. And by Monday and possibly Tuesday, we'll start to see the November contract. As it pulls back to demand, we'll look for an opportunity to go long again in that context of a higher time frame uptrend. Okay. Moving over to crude oil. Well, crude's got a lot of new drama coming into play. And with that drama, we also have a hurricane coming up. And the hurricane is also kind of questionable. I'm noticing when people are tracking the hurricane, they're noticing some different weather patterns that we're seeing. So in today's technology, there is technology out there that does impact the weather. Okay, it's been around for many years, but it's not been socially accepted to talk about it. With DARPA and HAARP technology out there, we might be seeing a whole different type of warfare, and things going on. Now, nobody knows who's creating it, because I think there's like 23 different places around the world that do impact that weather. And we just saw a lot of that in Dubai recently, when they started doing more of the cloud seeding, and they did it at kind of the wrong time, where a monsoon season kind of connected with their cloud season, and they ended up getting a lot more water than expected. The other thing about crude oil is that Saudi has given up on, or moved away from, their $100 a barrel price target for crude oil. Okay. And they've increased production. So do your own research on this. I'm not bearish yet. Okay. But I'm really suspicious on how things are going to play out here. So we might see a few other patterns, a few things starting to change. We'll use heating oil and gasoline. And right now, Canadian dollar is also showing a strong correlation. Okay. All right. So open range breakout trade, 67.51 or 67.79. Now, with the hurricane coming into the Gulf of Mexico, where we do produce a lot of oil and from the Gulf there in the deep, we might see a price increase. Okay. Now, the other thing that we noticed on the EIA report this week for crude oil is there was a significant drawdown, huge drawdown. Okay. Sorry, a huge drawdown in supply, which generally would be bullish for the market. So something's not quite cooking right here. Okay. So I'm going to be an observer on crude oil at this point, and just see how things work out from that. Okay. I'm not going to take the open range either, even though it looks like it might give us a drop. Yeah, we got that speed bump there. So if you're taking the breakout of that support, be mindful of the speed bump over here. Price may break out and then shoot back up on you. Okay. So again, I'm just going to be a little more cautious and wait for a zone entry on crude oil. Other things that may fuel the equity indexes to the upside. Let's bring up what we have going on over here. So we have the US dollar is now dropping pretty significantly. We do have a support area coming into play on a daily chart, right about that 99.96. Okay, so getting the dollar, it continues to drop, which is fueling the equity indexes. Okay, the 10-year yield also. I remember trading a couple of different softwares, so sometimes the functions I forget which one we're talking about here, or which one I'm using. We're also seeing the 10-year yield and the 2-year yield dropping in price, okay? Dollar dropping, 10 and 2-year yield dropping. You're probably going to see the FX markets move up and the 5, 10, 30-year bonds and notes. We did have a gap down on the QMI, which is a little bearish for the NASDAQ going into the open. The QMI is really important to watch and monitor on a day-to-day basis, right at the opening. It has a 92% correlation as to trader sentiment at the open, okay? Now, this indicator was developed by the NASDAQ exchange, and they use it to help them price the market open, okay? VIX is still relatively complacent, okay? So there's not much going on with the VIX. The trend has been very low all morning, okay? Trend low and the market's going up usually implies there's selling going into that move up on the equity indexes, okay? And you can see there we have a reading of about 5.9 or 0.56, 0.59. Anything below 60 is where we're going to be looking for prices to be hitting that supply zone on the equity indexes for an opportunity to sell short. Okay, let's bring that in. All right. Okay, still taking a little heat on the nat gas. And let's jump out to the equity indexes for a moment. Okay, so we did have the PCE report come out. Let's double check over here. So 8:30, we had a bunch of different reports, and generally speaking, if there's just one major report at 8:30, we get a bigger reaction. When there's multiple 8:30 a.m. reports, it's usually a delayed reaction, okay? Now that's important to note too. And if you start to document these little behavior patterns along with the time and the release of the economic reports, you can actually manage your expectations for that, okay? Let's see, am I not showing my... There we go. Just couldn't see everything. Yeah, working off of a laptop is a little different than my big PC at home. All right. So let's come back in here. We do have a couple of new Globex highs on here. I do want to point out that the equity indexes right now, S&P is inside the prior day's trading range. Now you're going to notice that at the session open, and as I'm doing a pre-market prep and getting things lined up for us to do some trading today, okay, is that when the equity indexes are inside the prior day's trading range, okay, an inside day, and it is inside until it breaks, we have some very specific rules that we follow along with that, okay? Now, the specific rules that we watch for is that, let's see, is that we don't take any breakout trades, okay? Because breakout trades often fail. Now, as we keep documenting how many times a breakout trade fails on an inside day, we look for a breakout and then look over for a zone over to the left-hand side, okay? Eventually, we'll start playing that trade as far as an inside day, taking a breakout and looking to sell short off of that. As long as it lines up with a supply zone or a demand zone, we'll look to take a trade, okay? But currently, we're just kind of sitting back. I do tend to teach a little bit more when the equity indexes are in an inside day because things are choppy, okay? as we mentioned in the pre-market prep, the Dow 30 stocks, the volume is still fairly light in the pre-market. But the last 2 or 3 days, it has been picking up, okay? Monitoring the volume on the Dow 30 stocks in the pre-market as you like starting an hour, 2 hours before the market open, okay, you can see that the trading starts to either be very light volume, and that very light volume can be very impactful around economic reports as far as a whipsaw action, okay? Low volume, high volatility, okay? Because what's happening is price starts to jump up or jump down to find the buyers and sellers so they can match tickets, okay? If we have heavy volume, then we know that the banks and institutions are either buying or selling in the pre-market, okay? So monitoring that helps us prepare for the market open. Light volume, we did have some economic reports come out. We got a little spike up or a spike down on the smaller time frames, okay, a little whipsaw. But around the session open, we're going to expect a little more whipsaw price action there, okay? So we'll come in, we'll drop down to a tick chart on some of these equity indexes, but currently inside day, markets are kind of choppy at the open. And we're looking for zone entries only, a supply zone or a demand zone. And what we've documented is with the equity indexes, trades going into a demand zone or supply zone later in the session tends to be a higher probability trade outcome, okay? More favorable trade outcome, okay? Yeah, just double checking over here. Let me know if there's any questions about what we're talking about. Anybody that's viewing the live stream, maybe type in your question. My team is there on standby watching those questions, and they'll let me know when they pop up, okay? All right, let's keep going. NASDAQ, let's bring that up. And you can see right now that there's potential that breakout, but the NASDAQ is also an inside day. As we look over at the top stocks, Tesla's up 251, Microsoft up $1.31, Meta's up $1.16, Apple 53 cents, and Amazon's kind of flat. Okay, so again, just a confirmation that the stocks are also kind of quiet on the NQ, okay? So we're waiting, looking for a zone entry, and we'll do that off the tick chart. So let's pull up a tick chart. A smaller picture of what's going on inside. We'll look for opportunities to either go long or go short. Okay, and just another quick glimpse of what we have going on. Netflix down, Microsoft and Tesla, the big gainers in the pre-market. Okay. We did just have price on the NASDAQ come into that supply. Okay, we have demand down a little bit lower. Where we had an accumulation of orders in the overnight session. Now, one thing that's really helpful about an inside day is you learn to kind of pull back a little bit, relax. Okay, once you recognize that all the equity indexes are inside the prior day's trading range, you know things are going to be choppy and designed to take your money. So you want to be very conservative about the trades that you take, okay? That's why we have several rules around the inside day, okay? And let's see, the S&P on the tick chart as well. S&P has a nice fresh buy territory. And looking for demand zone got a couple of places that we'll look for it. 57.98, 57.90. And we have that lower one down as well, okay? Again, we're looking for zone entries. We do have more economic reports, Fed speaking later on in the day. We have a speed bump just above at 58.17, 58.21. And then we have our zone, a zone entry, which would be about 58.25 and 58.29, okay? Now, very often, if you recognize a speed bump, it's where we get those little fake out, breakout type trades, okay? And let's bring up the Dow. I think the Dow and the Russell are going to give us a good show today. Okay. So I'm leaning a little bit more towards them as they're playing catch up. Dow is right back at the all-time highs. So we haven't taken it out yet, so there still might be some sellers up in this range. Let me bring that back down. Okay, there we go. A little breakout there. Oh yeah, thanks for that, Liz. I know we do have some students that are over in the Carolinas, and I know they have the outer bands are there in Louisville, Kentucky, so they're getting a lot of flooding and a lot of things going on. We'll just have to see how that plays out over the weekend, okay? As if that storm keeps going, it's going to start to hit the Northeast states as well. And that's where we have our markets and a lot of the traders there. So watch over the weekend and let's see how things are setting up there. All right, I want to change that color to red. Now, we do have a fresh accumulation of orders. The Dow and the Russell were the last ones to start to move yesterday after the S&P and the NASDAQ had a pretty big move up in the night. Okay, so dropping down the time frame. Oh, thank you, Liz. Liz pointing out that storm I just mentioned, the Hurricane Helen, is it Helen? Yeah, is moving more towards the west. Okay, so we're going to take a moment and go look at some agriculture products. Even though harvest is coming up, okay, we're right near that harvest time, and generally seasonally wheat and corn would start to move down, and soybeans, okay, but we're starting to see them sustain a price movement up, so there might be something going on there. The weather is a very good odds enhancer when watching the agricultures this time of year. It's like they're creating additional volatility. Everything just kind of seems weird lately. But the only truth that we have is what price is doing, because price is just a documentation of a transaction that's already happened. Okay. Wow. Eastern Arkansas and Kansas on the west edge. Wow. Sounds like you guys are going to have a pretty exciting weekend. The outer bands, okay. All right, Russell did break out. We're still just a minute before session open. Russell is an outside day, so we can take breakout trades now with the Russell. Okay. IWM is a good odds enhancer, and we're also seeing that the Russell has a wide range for the Globex session, which is we're looking for the bull trap or the bear trap. Okay. And we have a leg base zone way back down at the bottom here. And one right. Right. And the markets are open. Go back and check on our nat gas trade. Okay, so nat gas is holding. Still a little volatility. Okay. We could still be stopped out on this trade. Okay, but a lot of things coming into play right now. Big move up this morning, 3% move up on nat gas. Okay, just before last trade date. Okay. So we want to be real careful with that, nimble, don't just hold it, wait for a good setup and a good entry. If price stops me out again, I'm going to be looking at the upper area here, 2.866, 2.883 area for the next supply zone. Okay. And crude oil going sideways. Okay. Our gold, let's jump out and look at gold. Gold still holding its own to the upside, but it is forming somewhat of a topping pattern. It's only partial complete. It's not a topping pattern until it is complete, but we're seeing some characteristics with that base right there where buyers have pushed price up. Okay. Oh, really? Okay, I'm getting another report here. Yeah, it was really kind of tricky with the last trade date on natural gas. So make sure you go out and verify that information. One of my students, Chris, is pointing out that last trade date was yesterday, and that's what the CME reported. Okay, but prior to that, we noticed that they were reporting it would be out on like the 30th. Oh, sorry, the 29th, Sunday night. So a little confusion on that. Okay, well, at least we're on the positive side of it and looking for price to come back down to demand area there. Okay. Let's come back and look at the equity indexes. S&P, I always watch when we have a resistance area and then we start forming a base. Okay. Need to have multiple touches. Now, again, breakout trades, since S&P is still inside day, a breakout trade to the downside is going to be elevated risk. Okay. Now, some people are okay taking the elevated risk. Okay. Some tend to wait. Okay. And you have to decide that on your own. Now, keep in mind, we don't take responsibility for your trades when you click the button. Okay. But let's see, we got the speed bump. So I'd like it to test that speed bump up a little bit higher before we take a short and also take out the Globex range, which is, or the prior sessions range. Double check that again. Yeah, we got a long way to go. All right. Boy, stocks are still on the lighter side. Dollar's getting a little bounce. We're also seeing the 10-year and the 5-year yields getting a little bounce. Okay. As mentioned in our prep, we were seeing wheat wheat was looking at a break to the downside to find a demand. Okay, and I'm going to set that trade up now. And let's come back over here. And let's pull up wheat. This fly has a death wish. I can't believe it. Got the whole rest of the house. Why is it coming after me? Okay, I'm shutting a couple of things down. Seems like my screens are slowing up a little bit. Always make sure you use a protective stop loss. There we go. We're trading the December wheat. Things are running a little slow for me, so you guys might have to make sure you're checking things out on your own platform.
Order filled.
And come back up here, place my stop loss. Now, one of the patterns that I saw in the wheat this morning was on the larger time frame was this pattern here, a price pattern, which is associated with a bear flag. Okay, we've got a nice flagpole. Price had a slight upsloping channel and breaking to the downside. Now we do have a little bit of support, and price may bounce off of that area. Right below it, there's a speed bump on that after that support, and a leg base scoop of candle. Okay. So as price drops below this support area, we're looking for kind of little fake out breakout, and I'm looking for that 573 and 2/8 as a target for this trade. Okay. And I need to make sure that I have my stop in place and I have it in the right place. Okay. We got a trade on wheat, and we have a trade on nat gas that we're kind of watching as the Friday session starts. Okay. Boy, so tempting to take the breakout trade, but we got to wait for it. Funny how the market just teases you. Oh, NASDAQ dropped right back into the zone. NASDAQ stocks are somewhat mixed. Okay. Let's take a look at the SPY and the Qs. Small gap up on SPY. Not really into a supply zone. Okay. And price never met our demand zone yesterday. Got a nice bounce off this area. Okay, we're in a gap filled, but there's a leg base. It's still down a little bit lower. And we'll look for SPY to come back down to 569.82 or continue to make some new highs. Important to watch what's going on with the QQQs. The Qs lead the NASDAQ futures, okay? And I'm going to put an alert on this one here just so we're aware that when the Qs breaks at 488.84, okay, that we should be seeing some momentum on the NQ back to the downside, okay, which is going to kind of align with our trade that we had on the tick chart, okay? We're also seeing the stocks for the NASDAQ. We got some that are down, some that are up. It looks like a really mixed bag, okay? NVIDIA down, Google's still, you know, just kind of filled the gap. It's flat on the session. Meta's up, Microsoft holding. Yeah, they're not all going the same direction. When they're not all going the same direction, this is like an inside day, choppy, designed to take your money. Okay. I'm gonna keep a close eye on the Qs. Have that down below. Yeah, we have had some real sleeper markets, you know. Drawing your attention to Japanese yen. Last time we saw such a spike up on the yen, we saw a correction in the US markets, okay? So I'm really suspect of what's going on with the yen. Especially around that yen carry trade and what they're doing with all of that, and how Japan is dealing with their really a big financial crisis here. Okay. Aussie dollar moving up, Canadian dollar basing. Let's take a better look at that one. Let's come over here. Maybe we'll have a trade on the Canadian dollar. Canadian dollar is also lined up with the and correlated with the crude oil, okay? So drop down small. I just don't have a really good picture. We do have a support area, and along with the resistance. Okay, so not much of a trade till we break that support or break that resistance area. And this is down to a 20-minute chart. I'm looking to participate in that and go find a leg base. And we got a smaller one down a little bit lower, okay? So markets are going sideways, a break to the upside. We have supply above, break to the downside. We have demand below, okay? As much as I really want to make a trade, it's not giving us anything just yet, okay? What else setting up here? Euro came back up and tested the supply, sorry, the resistance area. And we went through that lower zone. A proximal line entry on the upper one, and now probably price will go a little deeper into that zone. Yeah, I had a pretty strong move away. There was two zones there, and it's right in the middle of it. Could probably just use this one. This one is right at the origin of the big drop. Nice little pocket of points on that. Okay. And that's what we dipped into, and that's what we're testing again, okay? I'm not ready to take a trade on that yet. I'm still looking for some confirming information. And let's come out to our equity indexes. We had bonds and notes got a nice little pop. Looks like Dow's at an all-time high. Dow's an outside day now. Okay. So let's look at a tick chart. Looks like the Dow is just still crunching up. I don't have a good clear picture of a fresh accumulation of sell orders, so I'm still on the sidelines with that. And here comes Russell. Inside day, the fake out breakout, pulling back down to demand. This demand zone is in a buy territory if we step out on a little bigger picture. Okay. And this upper zone, though, is margin not quite in the right location. Okay. Generally, if prices breaks out from the low point here, without a higher low going into the breakout, the lower 2/3 of that range is going to be a better trade opportunity. Now, remember, with the equity indexes opening inside the prior day's trading range, the better trades are going to be a little bit later in the session. Okay. Now, zone entry is okay, but this upper zone may be a little bit more elevated risk. Look for a short-term trade. I have the IWM, big gap up, potential gap fill. Okay. We don't have anything really in the way for the IWM. And this will be moving before the futures. Okay. So we might see that little last, like a little test of support. So kind of a bounce until we get a little bit lower on the IWM. Okay. Ah, yes. I do want to take a peek at, let's start with gold first. And as gold is making that base, okay, let's now come over to, gold is kind of looking bearish and kind of a topping pattern there. So let's take a look at copper and platinum, which generally follow what gold is doing. Okay. And I'm breaking down to a small time frame on this. I want to keep my risk small. We're trading a December contract, HGZ24. And looks like price has just popped back up into a leg base group of candles. I'm kind of liking that one, but I'm gonna give myself a little extra room on this trade. I'm going to take this trade as it starts to leave. Okay. Now, one thing why I'm going to look for more of a confirmation entry on this is there's a pattern on here that kind of looks bullish. Okay. Nice flagpole run up into a supply zone. Okay. But we also have this slight downward sloping channel, which is not that we're using it for a trade, but we know novice traders use it as a kind of a bull flag picture. So their perception is it's going to go higher. Okay. Until it starts to break. So I'm going to look for confirmation as price leaves this area. I'm gonna set that trade up. I'm gonna set it up at 4.6145. 6145. I'll go 50. Okay. Okay, so once I'm triggered, I'll come back in and I'll be placing my stop on that as well. Okay. Let's bring up Platinum. Platinum's also a great product to trade. Thanks for the questions in the YouTube section there. Okay. If you guys have any specific questions, I'm happy to cover them, especially since the market is really kind of waiting for something. Okay. We're noticing that the candles are moving slower. We're not having a lot of like big volatility at the moment. The rhythm is just off, or the frequency's off a little bit. And we don't have many more economic reports that will impact the market. 10 a.m. Yeah, big one. Consumer sentiment. That's what the market's waiting for. That comes out in 9 minutes. Okay. Maybe that's what the market's waiting for. Now, consumer sentiment is one of those surveys that's done by the University of Michigan. They have a bunch of students at the economic students at the University of Michigan that do some extra credit by making doing a survey of about 500 homes around the United States to get a feel for how do you feel about the current conditions. Okay. Now, if you donate to the University of Michigan for this, they give you that information about 2 weeks ahead of time. Okay. So the number's already out there. Okay, so Platinum still has a supply zone up above. If we get a reaction off of the the consumer sentiment, maybe a pop up to at 1,035 half. Okay, it's about a little larger time frame. Yeah, that doesn't look very bearish yet until we get up into supply. Okay, so this is going to be more of a counter trend trade. And recognizing it's a counter trend trade, you may be taking on a little extra risk. Okay. We just found a resistance area. And we're going to look for a couple of demand zones down below. I'm adjusting the time frame so I can get a good picture of the leg base group of candles. And I suspect there's one right in this area, which there is. And these will be my profit targets for a short trade, or there'll be a chance for me to go long if price drops back into that area. Okay. So in a perfect world with that economic report coming out, okay, we may see a pop up into supply. Okay, a little reaction, maybe even a little short squeeze, and then price to move back down to find the buyers. Okay, so in mapping out the right side of the chart, a trader could look at taking a breakout trade. Okay, as long as it's qualified, and you have more than 3 touches making that resistance. Natural gas back up to supply. I'm probably taking a little heat on that one. Again, okay.
Order filled.
Thank you for that, Chris. And I'm not going to trade the open range breakout, so I'm going to take that off the chart. And just going to have to sit through a little heartburn here. Okay. But for those that are just coming into nat gas, there's a nice little supply zone. Make sure you have your stop in place. Okay. That's one thing that I messed up over here today. Boy, look at that. Isn't that fun trading? Look at the NASDAQ or the S&P. That is a lot of chop. Inside days are like this. Okay, it looks like the Qs. And I'm looking around at the stocks. Not getting that big warm and fuzzy that we want to jump into the market. It feels like everybody's waiting for something. We're still 4 minutes away from the consumer sentiment report. As we mentioned earlier in our session here, an inside day is kind of what's set the whole tone for why we're not doing a lot of active trading here. Inside days are choppy like this. They're not easy to trade until we start making a move. So it's kind of like an inside candle, okay? Price is inside the prior day's trading range. It's a decision day. And as the market is deciding what it wants to do, okay, we're looking for the stocks over here. I'm looking at the NQ at the moment for this. Google still looks pretty strong, but you're looking at Amazon, it's leaning lower, and NVIDIA leaning lower. We're getting some red candles on the Netflix and Microsoft, Meta. Okay. And we're seeing that the Qs are just right on that support level. Okay. Looking kind of bearish, but we have to anticipate in 2 minutes that economic report's going to come out. Okay. And that economic report may have a pretty good impact on how price does some whipsaw, especially on the equity indexes here. Okay. Qs or the NASDAQ looks a lot more, or the Qs look a lot more bearish than what we're looking at on the SPY. SPY just came back and filled the gap. Okay. And SPY does not have a support level up higher. It's actually pretty much lower. Okay, so we're about $1 off before the S&P comes down. So the NASDAQ may be the front runner to help with the SPY. Okay. All right, so we got platinum on deck. Copper was also one that we want to keep an eye on. We're looking for a reaction here in just a few seconds. Let's see. We already have this trade set up, correct? Yes. Okay, so copper, just ahead of the consumer sentiment number, we do have a trade set up to take as it breaks that support back to the downside. We got a potential profit target down below. And we're also watching platinum for a price to pop up into supply before we'll have an entry to go short. Okay. Just looking over on the side, not seeing much reaction in the dollar or the 10-year yield at the moment. Yeah. You get all geared up to participate in a trade, and then it's Friday, you want to make some money for the weekend. The market's not cooperating. Oh, looks like our wheat trade is, so let's bring back wheat. Come on, chart, come up. All right, so wheat is working out in our favor. We're still looking for 573 and 2/8, and that'll be our profit target. Starting to notice the data slowing down a little bit, so I just want to save all my workspaces. Save frequently and often. And what else do we have here? Okay. How did the equity indexes start to react off that? The dollar just getting a really small bounce. Okay. It looks like the equity indexes are still a little more on the weak side. Well, the Qs just started taking off. Let's go look and see how the bonds and notes reacted off of that. 5, 10, 30-year bonds and notes getting a push up. Okay. Oh, what a mixed market. YM made a new high. Okay. That slow grind up. Look at that. Algorithm trading, back and forth, back and forth, back and forth. Russell back towards the upside, didn't hit our zone. So one of the key takeaways that we have today, Friday, okay, is that equity indexes started off as an inside day. Now, have we had a lot of directional trades, whether we're going to be participating in the equity indexes? No. Okay. Inside days are that first leading odds enhancer that things are going to be choppy around the equity indexes. Okay. In fact, we haven't taken a single trade on the equity indexes yet. Okay. The inside day is that lead to help you manage expectations for the session open. If price is broken outside of the prior session's range, that's a little better frequency to trade. And then we look for the gap fills on that. No breakout trades on inside days. Okay. Choppier market conditions, so we'll verify volume and economic reports. See it when you realize that the equity indexes are inside that prior day's trading range. They're may not stay there the whole day, but at that moment in time, they are there. And if they have not broken, we expect a gap fill. So whether price is down or up, we expect it to go back up and fill the gap or go back to fill the gap. Okay. And we look for trades later in the session. Okay, so we still have another 30 minutes before some of the trades tend to work out better on the equity indexes later in the session. Okay. How about our S&P? You'll find that being part of the live trading room here on marketinstitution.com is that we go into a lot more details of why things are happening the way they are. Okay. Having a good understanding of why it's happening and some other things that we can document, okay, and verify, well, when this is happening, these are the conditions for trading, okay? And then when that's happening, these are the conditions. As you verify that many, many times, you start to be comfortable in using these. Now, my job as an instructor is I'm just pointing these things out. Your job as a student is to verify this information, track it yourself, document it yourself. Okay. The more you do that, the faster your learning curve comes into play, the more you accelerate your learning curve. All right. So not much reaction off that consumer sentiment report. Okay. And we're still choppy on the markets. Okay. The Qs still look a little weak. Let's get some things set up on the NQ. Again, this one's going to be a little more elevated risk. Okay. We have that support. Price has tested that area multiple times. And I know I'm taking a little extra risk on this trade. Okay. But I'm starting to anticipate the breakout. Look at the NVIDIA's dropping, Meta's dropping, Tesla moving lower. Okay. Still a little mixed. What we got going on with Google? Google's shooting up, Apple's shooting up. See, my challenge is inside day. I'm breaking my rules if I go short. But But have you ever crossed the street when the crosswalk said don't walk? No, you kind of have to assess the market conditions. Now, the other piece of information that why I'm leaning towards that, and I might be able to, the markets may be favorable for me just to wait another 20 minutes on this, and hopefully that it doesn't trigger my entry. Okay. But I want to point out this area right here was resistance. And now we have support. So this is changing my opinion about what I want to do as far as a trade opportunity. Now, since we are an inside day, we know that these conditions are a little more risky. Let's see. I'm not, are you seeing the chat over there? I guess you are because you're posting it. Are we good? Sorry, I'm just looking around. Okay, so I'll keep going forward. If let's get this one, that's a green color. So we're looking at a potential, what we call as a flip trade. Price broke out of resistance and now it's created a support. So price breaking that support and looking at the cues, that support, we may have a good trade opportunity here. So I'm leaning a little more towards taking a breakout trade, even though it's going against my overall trade plan. Okay. Is I'm anticipating this area and a break of the 2000 or 20,309 that we'll start to see price moving lower. Now on the cues, it's wide open territory, nice pocket of points on that. We still have to find a way to manage our risk. So I'm going to stick with, I'm going to take the trade right here at 309. Actually, I missed it here. Let's come back in. Oh boy, my data's a little slow.
Order filled.
Take a look at the stocks. Nvidia is really dropping. Okay, Tesla's coming back. Now we just need some help from Google and Apple to participate in that move down. Okay, now this is a higher risk breakout trade. Okay, you have to be prepared to give yourself a little extra wiggle room. Yep. Just reminded myself why we don't take breakout trades. Quick little breakout, price moving back up. And we're right there about the quarter hour. So there'll be another re-entry if you want to participate in that. As price breaks at 309 level. Now we do cover this, the structures and the patterns and the breakout, price dropped into an area which we call a speed bump area. Okay, just below that support. Now, once price tests that speed bump, breaks out, test it, and pops back up, you can re-enter that trade potentially to the downside. Okay, in this example, to the downside. Okay. And let's find where our demand is. I want to keep an eye on, yep, look, the Q's just broke and doing the same thing. Find a place for our profit target, which is back at support. All right. Okay, so we're looking for that support area down here. That's going to be my profit target. Okay. Now, 3 out of 4 times, or 78% of the time, price will bounce off a support or resistance area. Okay, so as price already tested that speed bump area with the higher low, okay, ran back up into supply, we're seeing how that potential where we're going to see the flip of the index, okay, on the Qs. Oh, sorry, the NASDAQ here. What we need help from is the stocks. Okay, why are we getting such volatility here? Apple's still moving up, Google's still moving up, but we do have NVIDIA leading the way down, and Microsoft, Netflix, Tesla's helping out a little bit. But what we need to see is to be a lot more comfortable in this trade is Google and Apple to start pulling back. Once Google and Apple join in, the Qs will continue to push a little bit lower. And then we'll look for our NASDAQ futures trade to play out, okay? So as we're kind of observing Apple and Google, we're keeping our fingers crossed. Come on, Apple, short, okay? And see the stocks on futures, they move first, then the exchange traded fund, then futures, okay? Futures are a derivative instrument and they follow the cash market. Okay, so understanding that cash market, we're going to take a little glimpse over here at the, we're getting a bounce on the dollar on a small time frame. Okay, the trend is neutral, VIX is neutral, but what we need to see is that dollar start to move up, then the equity indexes will move lower. Okay, but the dollar still, and the 10 and the 2-year yield, they still look kind of bearish, which is giving us pressure to the upside. Okay. And we're later in the session here. There we go. Come on, Apple. Come on, Google. Boy, Meta's showing some help. Amazon. Now we're testing how long we're going to stay in the trade. Okay, we're seeing various little levels, a bounce off support again. Pretty volatile bounces. We need to pay close attention to the stocks and the time of day. Okay. If all the stocks start bouncing and moving back up, then we have to exit the trade. Okay. Kind of waiting and watching at the moment. All right, wheat's still working. We're just coming right down to that support. So we may see a small bounce at this point. Not a bad place to take a small profit and then potentially look for that bounce back out of that speed bump area. Okay. Yeah, markets are just slow. Let's go back over to crude oil. Yeah, crude coming back up. Still pretty choppy in the session. Boy, really choppy. Look at that on the S&P, just back and forth, back and forth. Take a quick look at our internals here. I call them my internals, kind of like a dashboard here. We're looking at the trend for the trend, $TRIN, which is the short-term traders index or the ARMS index developed by Richard Arms and published in 1972. The trend takes into calculation for the whole NYSE the number of upticks over the number of downticks, the advancing issues over declining issues, and then the equation is they divide those two and then divide in, so we get a kind of an inverse indicator. When the trend is low, below 60, the markets are usually ascending. Okay. When that happens, that's implies that there's more downticks, down volume going into an up move, or traders are selling into the up move. Okay. When the trend is high and the markets are dropping, okay, that's an indication that they're kind of putting the brakes on a down move. Okay. Meaning that there's more upticks and up volume, but the indexes are still pushing lower. Okay. Now, we use demand and supply around that. So if the trend is high and the markets are dropping into demand, then this becomes the opportunity for us to go long. Gives us kind of a heads up that the stocks are already starting to turn. So the stocks on the Dow and the S&P, okay, are the ones that will be associated with the trend for the NYSE. For the NASDAQ, there's a trend Q to watch and monitor that, okay? The tick is a number of upticks over downticks on the NYSE as well. So really heavier influence on the Dow and the S&P futures, okay? Advancing issues over declining issues. If we have more advancing issues over declining issues, again, on the NYSE, then it's assumed that prices is moving up. but it's an oscillator and we get kind of max out. So once we max out on the number of advancing stocks over declining stocks, we start looking for opportunities for the trend to be low, where we can look for a supply zone entry, okay? And so on. The tick, we're still getting a number of upticks. Now, we have to be watching the number of upticks versus downticks for whether they're either buying to cover or they're buying to go long, okay? So if the markets are going up and we're getting more upticks and up volume, that can help influence to stay in the trade longer. But once we get up to the extremes, it's almost like a tachometer, if you will. You know, when you start hitting the red lines, it usually when the market's running into supply, and we'll do a little shift lower. Okay. How are we doing with our NQ? Ooh, NASDAQ probably moving up sharply there. Dollar's still moving up. Again, let's go back out to copper. That's wheat. Copper's still hanging out up there. Platinum. Still not hitting any of our zones. Man, doing a live stream when the market's just doing all this choppy stuff kind of makes it tough to show off a little bit, doesn't it? Let's take a quick look around here. We're about 3 minutes to the bottom of the hour. This is where the equity indexes should come more into play between 10:30 and 11 a.m. Eastern. Okay. Now, between 10:30 and 11 a, or sorry, between 8 a.m. and 11 a.m. Eastern is where most of the banks complete their and institutions complete their order flow. Okay. That's why we have a lot more volume and volatility as the banks and institutions are completing their trading, okay, and getting everything done for the weekend. Okay. So inside days, often the better trades are later in the session. Okay. Later in the session, 10:30 to 11 a.m., we're looking for price to align with demand zones and supply zones, a trade entry. Okay. The dollar continues to bounce up a little bit, not with a lot of conviction, but the 10-year and the 2-year yield also bouncing up, which again may give a little push to the equity indexes to move lower. Okay. I also want to point out as if you're watching this, there's a lot of nuggets that we're putting in to play here. A lot of pieces of information. Oh my gosh, look at that. The Dow just went bonkers. Along with Bitcoin. Ooh, go Bitcoin. Almost 67,000 again. And Russell broke out. Let's go back over to Russell because it broke out into a speed bump area. Now we've got a pocket of points, so Russell may still have room to go to get up to our supply zone or our prep screen zone that we had marked. The prep screen zone on Russell up there, 2271, 2278 area. Price broken at Globex high. It's an outside day. We have another resistance area about 2266 as it moves through that area. Gold. Gold continuing to form its topping pattern. Okay. Doesn't mean it's going to go down. It just means it's kind of basing here with more on the support side than on the resistance. And got a note over here from Miss Chris. What do we got? Crude oil, I say might be trying to get above the Globex. Okay. I just don't have a really good entry. It looks like I missed that one. Did you get that one, Chris? That little leg base right there? Yeah, dipped right into it. And there were so many things that are going around with crude oil. It's kind of backed away from it since everything was an inside day anyways. All right, S&P hitting the speed bump. Okay. Little pullback. Speed bumps are not really great to trade unless you have some additional information. Okay, we just know that there's going to be some resistance. So if you are taking a breakout trade and you have a speed bump over to the left-hand side, you want to avoid jumping into that. Okay, we're just at the bottom of the hour. I'm going over just a little bit because I want to make sure that we're checking all of our potential trade setups. And we're still watching the NQ as it's playing out. Did go back up into supply. And it looks like we have more participation with the stocks at the moment. Amazon new low on the session. Here comes NVIDIA coming around the far outside. And what's Microsoft doing here? Microsoft got a double top. Looks like it's got a nice red candle. Okay, so it looks like the NQ is starting to roll over and also the QQQs. Okay, we don't have anything in the way. This is more like a overnight, or sorry, not an overnight, we got a strong move on lighter volume, which happened yesterday's session. Okay, so we're looking for a little more momentum to pick up in just a couple of seconds here. As soon as we take out this little support area, there's nothing in the way to get us down to our target. Of course, you put that out there and it starts bouncing back up against you. Google seems to be a big driver to the upside, and looks like Tesla's getting a little bounce to help support that. Okay. But we're still seeing some weakness. Apple's coming in a little better now. And we just got a small bounce on the QQQs. Okay. All right. Well, not a really flamboyant session, but we did have some good lessons in between. We learned a little bit more about the inside day, outside day type trading, gap fills that most often occur. the choppier market conditions. We're learning those things ahead of time, okay? But that doesn't necessarily mean that it's going to keep you out of a trade. Generally, when the inside days come, it just kind of frustrates you a little bit more because you're anticipating that, well, you really want to trade. That's why we're here, okay? But it's everything is telling you, you need to wait, you need to wait, you need to wait, okay? One more look at our NQ. And what a choppy move down. I mean, a lot of back and forth, okay? I struggle with this because the P&L, it keeps going up and going down, going up, going down. I struggle with that. So if you struggle with trading the P&L rather than looking at the larger, you may want to move to a larger time frame to kind of downplay the small time frame whipsaw back and forth, okay? And you may want to not watch that P&L. We just had a very nice move down, and now it's going back up against us. But we did see this yesterday where prices kept going back and forth before it actually dropped off, okay? I think that's what we were looking at yesterday. Let's go revisit that, and then we'll wrap up our session. For those that want to do a little more trading and kind of watching the overall markets, I'll be over in a Discord room for a period as we for a little bit. Okay. Yeah, this is what was going on yesterday during that. And this was really difficult to sit through. And we've seen that pattern. This was yesterday morning. Okay. Then we got that drop off, but up and down, up and down. That P&L was not easy. And then we have another one that was right in this range. Okay. So once it chops and you get the big drop, you have to anticipate where you're going to get out of the trade. Okay. And that's kind of what we're doing over here now. Let's find that channel. So I'm going to finish my thought here is that in our Discord room, we have a voice channel that we can trade together. It's one of our community rooms. If you'd like to participate in that, you're more than willing or more than welcome, excuse me, to do that, okay? So I'm going to wrap up this live trading room session and just kind of look around, see where we're at. Everything's just still kind of quiet. Keep an eye on the metals, platinum, copper, and just kind of be mindful that today's trading environment right now is very difficult. Okay, so don't trade more. Don't blow up all your weekly gains for a Friday trade. Okay, understanding the inside day keeps you a little bit more on the sidelines and keeps us not trading as much. So thank you everybody for joining us. I'm going to wrap up this this session here, and I will see you over in the Discord room. Okay. Thanks again, everybody. Bye now.